Hi, Mr. Sahu. So, one of the pertinent questions that I would like to ask you, I mean, given the fact that I know you for about a couple of months now, and you had made the specific comment that you're not very happy with the way I've gone about investing. When you examined my portfolio, you said that the return that I have made over the past couple of years, last you examined, I think, a good 5 years, you said that it was not good enough. So, if I were to move let's just assume for a moment that if I were to pull out all my funds, it's not an easy process also. I mean, for anybody to move, it takes a fair amount of thought. Why would I come to you first of all, and what is the process that you adopt with regards to trying to assess my risk portfolio, and how do you go about it basically? And should I be full lock, stock and barrel moving all my funds to you, to MintBox? I'd like to understand why.
Well, Satyan, actually, as I briefed you earlier, our company tagline is making sense of investing.
Yeah.
What we mean making sense of investing, that whatever you do, it should make some sense to you. Most of the assets where I was assessing, in your case, it was an all illiquid assets, and the cash flow was not correct as per your requirement. So that is how the investigation really started. And my idea is that investment should be not only to grow the asset but also to give you the cash flow that is needed from time to time.
Yeah.
As I said, that whatever you do, it should make sense. First and foremost is that whether your contingency fund is in place or not, number one. In case of any emergency, the contingency fund is there or not. Second, your insurance are properly done or not, whether it is a health insurance or life insurance, whether it is properly done or not. That is the second important aspect of it. As we are analyzing, many investment of yours are also ULIP or unit linked plans, which are not most appropriate.
Yeah, that was forced sell.
And most of the investments are in real estate, which are not disproportionately high compared to overall. Why we should reduce the investment in real estate and make more investment into other growth assets like stocks and portfolio? I'll come to that point. But what I found is it is not properly balanced portfolio. That is the reason. So we take care of your contingency fund, your insurance part properly. So that comes under the personal finance. So personal finance has to be in order. When you see people, their personal finance is not in order, their investment is not in successful. So making this personal finance in order is my first priority. Then I have to come to investments. When it comes to investments, it was something like investments were all in without thinking much. You had invested in different kind of things, which needs to be consolidated. Like I was saying, first of all, your insurance and investment has to be separate. All investment has to be put in such a way through mutual fund portfolio so that it gives a better return compared to the market. So when we are creating a portfolio through mutual fund, first and foremost is that we see that the kind of risk you can take. Like we did a risk assessment test. I know what kind of risk you can take, whether 20% volatility is good enough, or you can take a 30% volatility, or even a 10% volatility is, where you are not comfortable with. So that we have done that kind of assessment. So these assessments are very important to structure the portfolio. So on that basis, we have designed the portfolio. Okay, when we have designed the portfolio, we have taken into consideration we have scattered into large cap, mid cap, small cap and thematic, where we see that we can generate the alpha. So considering all this, we have generated the mutual fund portfolio, which will give you far better return.
Which is approximately what?
See, our historical record is that, in index has given some 13.5%, including the dividend yield. The mutual fund has given more or less 15% kind of return if you have balanced it properly. if you are lucky enough to balance it and correctly understood the cycle, like in the last cycle, we are very correctly understood how the IT and pharma companies will do well. Because when we are doing the cycle analysis, we found out that these are the stocks which are not performed for very long time after 2000, that is post.com bust. These stocks, this industry were not doing well and it was consolidating for almost 10 years. That's how we have positioned ourselves little more in pharma and IT. So this thematic investment has given a much bigger alpha. Okay, so people who have invested for last 10 years, it's not advisable to say what kind of return they have got, but it varied from 15 to 20%, depending when they have entered.
CAGR.
CAGR.